Fireplanes and helicopters are flying overhead, scooping water from the reservoir nearby Chatfield, less than a mile from my home, to put out the Quarry Fire in Deer Creek Canyon, one of my favorite trails. While the crews are giving it their all, the fire remains 0% contained as of this morning, with 90-degree temps and no rain predicted. There are so many metaphors I could use right now in comparison to the fire and the housing market. The Fed trying to control inflation after printing $80 billion, the tug of war between sellers and buyers on prices, the fact that too hot is actually a problem in Denver, both in the forests that we love so much and on housing affordability. I'm going to focus this August market update on how prices are affected by supply and demand, the basics of economics. I have the pleasure of serving on the Market Trends Committee for the Denver Realtor Association, and I spent hours this morning and yesterday analyzing 30 pages of insights from all of the experts in the area. So these videos are brought to you to help you stay informed on the market. Please subscribe or share this with somebody you know who needs my help. Let's get to it. You know when you're playing tug of war and both sides are the same strength, so the rope barely moves at all? That is exactly what's happening in the Denver market right now. Sellers are holding the line, like those firefighters, holding to protect the equity they have in their home. Buyers, on the other hand, are pushing the limits. They're waiting it out for prices to drop, not realizing they actually have the buying power to make an offer right now. And this is reflected in the numbers. Close to list price ratio remains at 100%. The average monthly price was steady at $728,000. That's a 0% a month over month change from last month. And the market feels incredibly slow, with a 29-day average for a listing to receive an offer. Really, that is a very typical pace for July as compared to the past 15 years, even though it kind of feels slow to us. Prices are holding steady and the Fed rate cut has already been priced into the market. But the reason it feels so slow is actually due to lack of buyer demand. Stay with me here. We have 11,539 listings available in the Denver area. That's 30% more than this time last year and 20 to 25% more than any of the past 10 years. So you might think that it's due to foreclosures and distressed sales, but you are wrong if you think that. There was only one foreclosure last year, and according to CoreLogic, Colorado has only 1.5% of their homeowners with negative equity, and the homeowner gained about $28,000 during the past year in equity. So if I'm a seller who has to move, I'm going to list my home for sale, pay off my mortgage, and recoup some of my equity. Check out my video on how to calculate your own home equity and what that means. There's another kind of seller. There's the one who wants to move, can afford the new house, but doesn't actually have to move. This is where the tug of war comes in. These sellers are listing to see if they can get a certain amount for their home, in which case they'll buy a bigger home that's a better fit for their family. But the buyers are coming in saying, rates are too high, I can't afford to pay that much, I'm not making an offer. There were 4,281 pending listings this month. That's about the same for the past year, but compared to the years prior to COVID, that's 20% less buyers making offers. Mortgage purchase applications are at the lowest level since 1995. Talk about a bottleneck of buyer demand. We have 76 million more people in the US now than in 1995. Those people need housing. Maybe the tug of war is that these buyers are afraid of buying at the peak. But you know that the rule to investing has always been, and it applies today as well. If you wait until everyone is buying, you have missed the chance for a deal. If you move when others have a little bit of fear or are holding their cards close, you can capitalize on a stagnant market like this one. And you know how I know this is the market of getting deals? 45% of sellers have to reduce their price by an average of 5.3%, or about $40,000, in order to get an offer. And 58% of buyers are receiving seller concessions, about $10,000, to help them with closing costs or rate buydowns. So here's to the Fed helping us move rates and making the cost of living more affordable. Here's to buyers who are getting into the market right now in spite of uncertainty. Here's to selling agents who are being more creative on how to market your home for sale. Check out my next video on that. And the most important, here's to the firefighters who are holding the line to protect our homes here in Denver, Colorado. The market isn't always hot, and neither is the weather. Really and truly, this is a fantastic place to live. Let me know if you have questions. I'm Heather O'Leary with Kentwood Real Estate.